Hello and welcome everyone to the week ahead commodity report, where we will be reviewing the markets for the week ahead. So first of all, it has been a historic day in the markets on Monday. We have seen US crude oil futures collapsing below zero for the first time in history amid the coronavirus induced supply glut, ending the day at a stunning minus $37.63 per barrel, as traders have been desperate to get rid of oil. Now, I'll go through a couple of points that you need to be aware of at the moment, which is the May contract versus the June contract and the current price of oil now as we transition over to the June contract. Just in case you haven't seen this chart, let me just bring it to your attention so you can have a look at the May contract first. So firstly, here we have crude oil futures. This is the May contract, and this is where we've seen the significant decline in price today. So we started off around $18 per barrel, and we have had the decline all the way to zero. Not only to zero, we've also seen that acceleration to the downside, breaking down to minus $40 per barrel. So again, a historic day in the markets. And what you've seen here is traders effectively exiting out of the May contract and transitioning over to the June contract. Now, don't forget that the May contract is set to expire tomorrow. Therefore, we're going to roll over to the June contract. So currently we have US oil on the June contract trading at $20.70 per barrel. It's down 15% on the day, which is still significant, but nothing compared to the sell-off we've seen on the May contract. Now, we've talked about it before, but these unprecedented times that we have right now are creating extraordinary trade opportunities here. First of all, I just want to draw your attention to natural gas. So we've been long natural gas today. We've benefited from this breakout. It's been over a 10% move to the upside. We've now banked partial profits on the trade for over 150 points on our long position. Now, not only that, over the month of April have been incredibly lucrative for the precious metals. So we mentioned to you last week, we were looking at the opportunity to bank the remainder of our position on gold, which we did last week at $1,739 per ounce. We banked 1,500 points from our $1,589 per ounce entry. That was 1,500 points, but that's also added to the previous trade that we had on here at 1480 as well, which banked us 2,000 points. So we came out the remainder of that trade at $1,680 per ounce. So let me just show you those two trades, which in totality over the last month have actually netted us over 3,500 points. So we've got the first trade, which was from the 1480 level, trading it up to 1618, and then the second trade, and all of these we've gone through with you on our week ahead commodity reports and asset of the day in detail. And the second position here that we have banked last week as well at $1,739 per ounce. Now, what we did last week, we were discussing this with you, that we were looking for an exhaustive move on gold and the potential then to sell into it if we saw selling pressure or evidence of sellers coming into this market, and essentially exhaustive move on gold. So this is what we've done last week. We sold short at $1,714 per ounce. We've subsequently banked 50% of the move with the breakdown that we've seen over the last couple of days here. We caught the timing of this very well. In fact, we started to see the breakdown last week after getting into the trade on Thursday. We saw that subsequent sell-off later on in the session, which then had a significant sell-off on Friday. So we were able to bank over 300 points on the sell short side here. We have the trade protected from $1,714 per ounce. We are currently trading at $1,692. So it puts the remainder of the trade up currently approximately $220 on this position, with our stop loss protected as well. I want to observe whether we're going to see further acceleration to the downside here with gold. So gold has been under pressure over the last few days, and also look at the weekly chart here as well. So you will note on gold we've put in quite a significant reversal on the weekly here. Looks like a bull trap as well to the upside, a fake out move after gold broke out to 7.5-year highs. That said, it's consolidating at the moment. I haven't added another position on just yet because we're still short at $1,714 per ounce. So I want to let the remainder of the trade run. It's up 220 points at the moment, and just see if we can get a bit of further acceleration lower and essentially roll over back down towards the next key levels of support, which if we can get a more significant follow through to the downside, I would target the magnetic level here of 1,650 US dollars per ounce. Now it's possible that gold won't do that. So if gold doesn't break down further, and if it does develop into a bull flag, let's say, and starts to then develop momentum to the upside here, we'd very simply exit the remainder of the position, which has been protected at entry, and we'd review it and possibly switch position as well. But this does depend on whether we get momentum in the next couple of days to the downside here for the metals. I mentioned it before, but usually after Easter, and as you progress between now and the end of the month, it does favour dollar strength and it puts pressure on a lot of commodities. That's of course evidenced by the massive sell-off that we've seen on crude oil, especially on the May contract. Absolutely unprecedented move and historic move that we've seen on the crude oil market over the last 24 hours here. But that just shows you the power that we normally get over this time of year for the selling pressure on a lot of commodities. Not only that, we've also seen selling pressure today on, for example, copper. We've seen platinum also selling off as well. So we've seen a number of different commodities, especially the precious metals, start to roll over in the last couple of days here. Now, as I mentioned before, you also want to keep an eye on the dollar index at the moment, which has been building up some momentum in the recent days. Any dollar breakouts to the upside would also put further pressure on gold, on silver, on platinum. So it's worth just being mindful of that at the moment. If the dollar does build up some momentum here, it's currently up 1% on the week, that would very likely then see other metals start to roll over against that. With respect to silver right now, we've seen the signs here for a potential pullback on silver. What it would need to do though to confirm that would be a break back below $15 per ounce, a close below that level. Then we would very likely set up for a bear flag here, and then we can start to see the price accelerate to the downside if we were able to break below the swing lows at $15, which is a very key magnetic level there for silver. Otherwise, if it can't do that, then it will likely develop into a bull flag and have a retest back towards the swing highs here, back to around $16 per ounce. So it's at a bit of a decision point at the moment, so we're just assessing that right now. Platinum, we came out the remainder of the trade last week at 1,200 points banked. So we managed to catch that whole move from 675 US dollars per ounce, and we caught that move up to 795, where we trailed up our stop loss. So that worked out to be a lovely trade last week as well. So we managed to capitalize on this whole move to the upside for platinum. So banking 1,200 points on platinum, 1,500 points on gold. So that netted us just last week 2,700 points just between gold and platinum on the longs. Then we reversed position on gold. We banked 300 points on the sell short side. We're still continuing to manage that trade. And today we've also managed to capitalize on a natural gas breakout for over 150 points to the upside. So this just gives you an idea of some of the great opportunities that you've got at the moment, and really the importance of having an edge in these markets. It's not enough to only be looking at the technicals right now. You have to be very switched on to what is happening in the markets, the fundamentals, what we're seeing from a geopolitical point of view. This is why it's very important to keep an eye on the cycles in the markets and also have a research-driven approach to your trading. You do not want to be using outdated technical analysis. This is why many traders have been burnt today over the last 24 hours. Number one, they didn't know about the contract rollover from the May contract through to the June contract. So as such, they got stuck in the wrong contract. Many were liquidated on that big sell-off. And also, it's just that awareness that typically this time of year, commodities do come under pressure, particularly between now and the end of April, specifically after Easter. And we often see this increased pressure on commodities as we go into May. As the saying goes, sell in May and go away. And we're seeing that start to follow through on several commodities, most notably oil at the moment. So again, a research-driven approach is very important. You want to take into account cycles in the market, seasonals, market intelligence, research, geopolitical news, fundamentals, also increase the access to real-time data in the market. And alongside that, you want to marry that up with key levels for execution to give you an edge. So of course, if you would like to join a community of successful traders and learn a research-driven approach to the markets, there is an opportunity for you to do so. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You have access to real-time trade alerts, trading research and market insights, access to our private members academy membership site, and also support and one-to-one mentoring. For more information about our service, all you need to do is go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.